Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. In this video, I'm going to show you one example of a morning gap trade from this morning that worked out picture perfect. It did have a twist to it, and I'm going to discuss that in detail, but it still worked out picture perfect in terms of the calculation of where this stock should have a price reaction in the other direction. First, let's talk about what gap trading really is. When stocks are gapping higher or lower in the morning, it creates opportunity for traders. As traders, we need opportunity. We need stocks that are moving in order to put profit in our pocket. So what I do is teach a course where traders learn everything they need to know in order to trade the gaps successfully. What are the criteria that we use? What are the specific stocks that we use? How much volume are we looking for? How much of a gap higher or lower are we looking for in the morning? And most importantly, how do you calculate the specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction? Everything traders need to know in order to trade the gap successfully and for profit is taught in the course at LazyGapTrader.com. We're going to go over the chart of Walmart in detail in a moment, but first I want to explain the second thing I do is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that got sent to subscribers this morning. As you can see, it arrived in the inbox at 9:01 a.m. and that's Eastern Standard Time. This morning, we had 5 potential gap trades on the board. So far today, at the time I'm making this video, one of them hit its specific price level that we were looking for, and that was Walmart. The other ones haven't yet hit their price levels. It still may happen later on in the session, but if a stock doesn't hit the specific price level that we calculate, that traders learn in the course how to calculate for themselves, then we don't want the trade. It's a no trade. We only want the highest probability trades on the board. Walmart, I say gap lower, support levels are $94.79, $93.02, and $89.47. Each of these price levels are separate and independent trades from one another. There are plenty of times where we get a stock that hits multiple price levels on the way down and they produce positive trades on the way. Stop and profit target is about 40 to 75 cents. These are minimum profit targets. We're back on the chart of Walmart. I've got a 5-minute chart up on the board. And as you can see yesterday, the stock closed at 104.74. This morning, the stock was getting a tremendous haircut at the open, which is exactly what we're looking for. That created the opportunity, the fact that the stock was moving at the open. The level identified that you just saw in the email was $94.79, represented by the horizontal line running across the screen. And here's where the twist comes in. So the stock came down at about 9:55 a.m. down to a low of $94.80, missing the level by just 1 penny. It had a bounce. In the next 5-minute candle, it made a high of 95.62. That certainly gave us the minimum trade we were looking for. And then the stock came back down, and it pierced through the level by a little bit, making a low of $94.61, well within the stop-loss limitation. And then the stock had a nice bounce higher, making a high in the next 5-minute candle of $95.65. That represents an 86-cent bounce from the level identified 30 minutes before the market even opened for business. Now, I recognize that when the stock missed the level by 1 penny, traders may not have taken that trade, and they certainly might not have taken the trade on the second go-around. The point I want to make is look at the importance and the power of the $94.79 level, and look how the market, or Walmart, respected that price level all morning long. It continues to respect that level. What that tells us is that that level is extremely important to Walmart. These are the things that are taught in my course at Lazy Gap Trader. Traders learn why this works. That's the most important thing. When traders understand the strategy behind how to calculate these price levels, then they understand why these prices are important to these stocks. When they understand why it works, they have a different confidence when entering these trades. You're removing the guesswork away from trading. When you remove the guesswork away from trading and you add back in confidence, that changes your trades considerably. That's how you achieve profitability. Take away guessing and add back in confidence. When entering these trades, you have a certain expectation of what's going to happen. When you calculate the $94.79 level as a viable trade, you have an expectation that the stock is going to stop short, reverse, and have a bounce higher in the other direction. That's exactly what happened, and that's the expectation on each and every one of these trades. Now, this wasn't a tremendous trade, but it gave us the minimum profit target. Sometimes we get multiple dollars. Sometimes we find the low of the day. That happens quite a bit. But we want to make sure that we book the minimum profit target. And in my course, there's an entire video module where traders learn how to turn some of these trades into risk-free, emotionless trades, being able to get as much of the profit as possible without risking a penny after booking at least the minimum profit target. There is an absolute library of information in this course. If you want to learn everything there is to know about trading the gaps successfully, come over to check out the course at lazygaptrader.com. I'm David Frost. Thanks for tuning in, folks.